Hello traders from a new city, new video, and a new office. In today's video, we're going to be covering advanced metrics for MOVE contracts, including open interest, the average expiration price per day, and large trades on MOVE contracts. So it's going to be fun. Additionally, I just updated my delta neutral course. There's another section in the course, and also the bot that comes with the delta neutral course has also been updated. If you're curious about any of that, or if you don't know what delta neutral is, you can click the link in the description below and learn a bit more. With that, happy trading, and let's dive in. Okay traders, let's dive into the volatility and MOVE contract monitor. So I'm going to start this off with looking at the open interest structure of these MOVE contracts. Now there's a pattern here that I want you guys to notice. I'm not going to say it right away, but I want you guys to guess. What do you see with open interest here in contracts? So the pattern is that typically open interest is a lot higher for contracts that do not yet have a strike price. So contracts like the 918 and the 909 actually do not yet have a strike price, but we can see that their open interest is quite high. The only exception that we have here is the quarterly contract that we can see has a lot of open interest, but that's probably because it's been trading for the longest amount of time. Another thing that I want to show you guys with this is something that I've probably been using the most on this site, which is the total MOVE open interest. So this is all of the open interest within all of the MOVE contracts combined. So we can see when people are betting on volatility and when people are not betting on volatility. What I mean by that is when this is rising, that means that both one trader is betting that volatility will increase, and then the other trader is betting that volatility will decrease. So whenever this rises or falls, that does not necessarily mean that a lot of people are betting on volatility rising per se. It just means that more people are betting on volatility. Okay? So what we can do with this, I don't really know yet. I think one way that I've been using this is more liquidity, or when a lot of people are thinking that Bitcoin's going to do a certain thing. But I would love to hear in the comments how you guys like to look at MOVE open interest. And then this is another section that I should show you guys about. Yeah, so this is big trades on MOVE contracts. You can really see what are the whales typically doing here. Something that I found quite interesting that I wanted to show you, and maybe even be the reason for this video, is there are a lot of weird patterns going around here. For some reason, I mean not for some reason, but we can see exactly what happened. Someone bought almost the same amount on the current day contract that they sold on the 909. Now the current day contract's priced about 400. So if you bought 75 at 251, you just made 150 bucks per contract at current price. Times 75, you just made a load of money. Over $10,000, I think. Yeah, over $10,000. Around $10,000. So buying this and selling this was great. So one thing that you could do actually with this, I don't know if this would be very optimal, but following these big traders, like if I see a large sell in the 909, that could be a sign for me to potentially short this volatility, to short the 909 and then buy the 908. Because had you followed this and bought the 908 like everyone else had been doing, the contract's at $400 now, so it would have been a good buy. However, I do have to say that people were also buying here. So it's kind of a mixed message, but it looks like the dominant trade has been a large short on volatility on the 909. And we can actually even see other ones. This one's pre-strike. Someone sold the weekly. I'm looking for any big quarterly trades, Here we go. So someone bought a lot on the 3101, 10. But really, these patterns are just very, very interesting. I mean, I can see very, very, very interesting patterns, especially when the sizes are pretty similar. Because I'm pretty confident here that someone just did this, guys. They just bought the 908 and then they sold the 909 with the same exact amount, probably. So that is quite interesting. Strike price charts. This is showing where the daily strike prices are, and this is where Bitcoin is. You can see it's kind of getting farther away from the strike prices. This one's interesting too. This is showing daily expirations. So we can see that this is the average amount of expiration on each day. So Sunday, really, typically these daily MOVE contracts expire really cheap. They expire like 118-ish, But on Friday, we typically have a large amount of volatility, and these guys were expiring at like 260. So that's really something interesting to think about, that it's typically better to buy volatility Thursday and Friday, and better to short volatility Sunday, and Monday, basically. And that's something that you could even do as well, based off of a sample size of 395 contracts. That's the daily average expiration, and that's the weekly. So there you go. And you can also look here at the expired contracts themselves and go from there. Let me see. Oh yeah, and then this one shows you every single expired contract of Move, every single Move contract that's expired, and you can filter them. Like if I want to see all the ones that expired Sunday, you know, I can see that they typically expired pretty cheap. I would click that. The site's not really responding well, probably because a lot of people are using it. Oh, perfect, here it is. So yeah, so you can see all the contracts that expire Sunday. And you can see that, let's go down. Typically, are these all weekly and daily? Or are these, oh, these are like, I think no, these are just daily contracts. Yeah, so it looks like there's actually a pretty large range of where these Sunday contracts have expired. Like some pretty big ones. But still, I do trust the average being that low. So I still would rather short Sunday volatility than go long on Sunday volatility. So that's it. I just wanted to make this like a really quick and easy video for a lot of people to interpret. I find that this is quite helpful, but I said previously that my favorite tool on it is this, but really I think that looking at the trades and the patterns that's going on here is quite interesting, because this is how large traders are betting on volatility. And it's also cool to see like these really strange patterns that they're doing that kind of give me ideas, like buying the 908, buying the current day volatility, and then shorting the next day volatility, next day being Wednesday. It's just really interesting that they did this at the same exact price with the same exact size, you know? So something fishy's going around in the water. And then also the guy who sold 30 twice. Yeah, it seems like just a lot of people were selling the 909. So it looks like people were primarily selling the 909 volatility, betting that volatility will probably be nothing. And a lot of people bought the 908, as you can see here. So that's interesting. I think that typically these big move contract traders are, you know, I would typically want to bet with them rather than bet against them. But it does look like they're making and losing, but more making large sums of money, you know, like what they did right now. I would love to be long 75 move contracts at 250. That would be amazing, you know? But we got to build our way up there. All right, guys, so that's going to do it for this video. I hope that this tool can be really helpful for you guys who like to trade volatility and move contracts. And this is just another tool in your arsenal to give you a little bit more power when you trade these. Happy trading, and I'll see you in the next one.